I'm Dylan Ratigan. I've interviewed nearly every CEO and most world leaders during the past 25 years. And now I'm bootstrapping. I'm turning my attention to the new CEOs and the irrepressible entrepreneurs leading the next generation of innovation in the world. Welcome back to Tasty Live. I am Dylan Ratigan. Time for some more bootstrapping. My guest today, Rebecca Arippol of Arippol Estates. She is a entrepreneur, mergers and acquisitions expert, and the founder and owner of one of the fastest growing real estate firms in both Miami and Milan. And Rebecca, it is a pleasure to speak
Thank
with you.
you.
We're also friends, and so I won't. I will acknowledge that as well. But it's nice to have you in your professional chair for the discussion. I want to start with Miami because for a couple of reasons. One, the Federal Reserve's cutting rates this week. It'll be the first time we see mortgage rates come in a meaningful way, or the beginning of a rate cutting cycle in many, many years. At the same time, building permits are actually rising rapidly. For sure, the increase in building permits in the U.S. is related to an anticipated drop in rates. There's arguably no real estate market in America that has more velocity, both to have price gains and price losses and building than Miami. I've always thought that the market must be a bubble by definition. At the same time, it seems to always go up. Is Miami a good indicator? Is Miami a good indicator of the health of the real estate market in the United States, in your opinion?
So Miami is actually, I mean, it really does show. First of all, Dylan, I want to say thank you for having me on your show,
It's
number
nice to
one.
see you. It's nice to see you.
It's great to be here. Definitely seeing Miami growing so fast. It is an indicator of how the real estate market in the US and even in other parts of the world, in Europe and in Italy, specifically, is growing very fast. We saw prices growing rapidly after COVID, because that is also the main and first necessity of us people is to have a comfortable home. And we saw that especially with COVID. We were locked down in our homes, so that was the number one need, that we realized that it was fundamental for our well-being, right? So it wasn't anymore the partying, the going out. It was really about creating a cozy and comfortable environment in our private life. The fact that the mortgage rates are going down is a very good sign because it will probably help buyers buy more, and it will increase the purchase power for buyers at this point and feel a little bit more secure in the current real estate market. And also the fact that the building permits are increasing is also a very good sign of a healthy economy because the laws of the real estate, and excuse my English, but the laws of
Perfect.
the real estate is that the people make the demand, right? The demand makes the market, right?
Mhm.
So that's a clear sign that there's a lot of demand for new homes, for better homes. They're using a lot of new materials that create more sustainable also buildings. For example, the photovoltaici, as we say here in Italy. So yeah, so it is a very good sign of a healthy market.
You mentioned the cultural impact of COVID and the sort of reevaluation of the role of the home in people's lives. Is that permanent? I mean, does that continue today? How much relative to 2019? How much more are we returning to the pre-COVID? Where are we in terms of that perception of the home?
Obviously, that is a subjective perception. I do feel that more people are more inclined into a healthier lifestyle, and that is where the market is going. You know, you read about that in the news. We have people, fighting for different use of materials, even in real estate, to create better energy efficient apartments. And so that is, I think, a very big necessity for us people. I think COVID really did help us slow down a little bit. Obviously, we also have to be a bit careful when you've got so many building permits, to make sure that we're not creating a bubble, like you mentioned, right? And honestly, I don't see a bubble, as in, again, the demand makes the market. Okay. So if there is an increased demand and people are buying, even, if the prices are going up, there's still people that are buying. So I really do not see this bubble, but we have to be careful, or generally, we have to be careful that it doesn't turn into a bubble. People don't start borrowing again like before, which could
Well, do you think, I
inflate the
mean, because
market.
the other thought is that people stopped, basically when rates went up, people stopped selling. That prices didn't come down, but transaction frequency slowed down substantially. And then the bearish interpretation would be, well, as rates come down, that basically we're going to find there's going to be people that are going to become forced sellers that avoided selling the last few years. Do you get any sense of a big inventory that is, hope is hanging over the market, or it could come into the market as rates come down?
Um, I think it's actually a little bit the opposite, as in the transactions might be more frequent, but if rates come down, that also means that prices in a way can also come down, because there's a bigger purchasing power from buyers, and so they have more money to spend on the real estate, and therefore more choice. While before you have less inventory with a higher demand, and so prices do come up. Do you know what I'm
Interesting.
saying?
Okay. Yeah, no, I get it. So you're basically saying that the fact that there's more inventory will actually be
The prices will, yeah.
will increase the frequency and make the price a little bit more. You think the prices come down? That's almost never happens.
No, sorry, not that they come down. They go up,
The prices
obviously.
go up.
Yeah. Sorry, yes. When it's a little bit more rare for you to buy, so there's less inventory. Obviously, what's available. Sorry, when there's more inventory, what's available is also higher because there's less.
That basically the lower rates offset the higher inventory,
Yeah.
and that the market sustains itself because that it's a balanced market. So I know that in addition to Miami, and maybe more important than Miami, the anchor for your business is in Milan, where I now live and work. And my sense is that the European real estate in general, and Milan real estate specifically, is in some ways a more stable real estate market price wise than a place like Miami. Is that a false perception on my part, just because I'm less familiar with the European real estate market, or is European and Milanese real estate specifically more price stable?
I agree with that. I feel that I always have to speak about Florida markets, so the
Yeah.
Florida real estate. But generally, people buy more. Again, it's less expensive to buy in America than it is in Italy for a buyer. And also, generally, a lot of the Italians, they buy because they're looking for a home, okay, or for a second home to go on holiday. While I feel that the culture, especially in Miami, is there's a lot of buying to have more property and then putting it up for rent because obviously the income is higher compared to the Italian market. And so yes, that does create a little bit of a bubble in the Florida market compared to the Italian, which is a bit more stable. You don't feel in the Italian market big crashes. While
Mm-hmm.
in Florida, it can vary a lot, You have
And,
really high increases or big decreases. Also because when you find it makes a big difference in Florida, whether it's a cash buyer or not, something that it does not make such a big difference in Italy, where half of 50% of the buyers buy with a mortgage and 50% buy cash buying.
50% is cash, you're saying, in Italy, and 50% is mortgage on
Yeah.
average, typically.
So it's really.
And what is that? How does that compare to Miami?
Well, American culture generally tends to use more leverage. Okay. So
Right.
it generally is a culture which lives on debt. Okay. We know that. We saw it also in 2008. It's always based on, it's very common to be based on loans and on bank leverages. While in Milano, it's a bit more equal, right? And banks have higher controls here when they gave out the loans. So it's even very difficult to get a loan, which again keeps the prices more stable compared to maybe the Florida market.
I mean, can you buy a house in Milan for with a 5 or 10% down payment like you can in America? I can't imagine.
Difficult. It's usually 20%.
Hmm.
5%, it's very rare.
So Milan is interesting because it has been. I attribute it to my decision to move there, but I suspect that's probably not what it is. But Milan has been in a big boom. Brexit has been very good for Milan. The Olympics are coming to
Very good.
Milan. There's a
Yes.
big profile in the Financial Times recently about this sort of Milan is having this global happening, this moment in time. One, how real is that from where you sit? Does the real estate market reflect the hype around the city right now, in your opinion? And to the degree to which it is valid, what do you think is driving the emergence of Milan as a global cultural capital?
100%, very important. First of all, exactly these events. We've got the Olympics, which are pushing up the prices, but especially the tax benefits, which is also something that's helping the Florida market compared to other states. So we have, for example, Brexit is helping a lot the real estate market in Milano because, first of all, the Italian residents are coming back from England to Italy. But also, there's been tax reasons. So, for example, in England, excuse my English, by the way, but the basically
Oh, yeah, the
people who
resident non-domiciled status, that the special tax
exactly
waivers to basically you can come
exactly.
back to Italy with limited taxation, especially if you're
Exactly.
a
Not
foreign
just
resident.
Italians, though. We're having a lot of British people move here because a lot of they did not have their domicile registered in England, so they had a lot of assets outside of England which are not being taxed. Now they're going to be taxed to about 45%. So they're moving their assets in Italy, which they get a tax benefit for about 10 years of only a taxation capped at 100,000. Right now, the current government changed it to 200,000, but you understand that for a millionaire, 200,000 is, maybe nothing. Okay, it's a very small amount. The same we can see in Florida compared to, for example, other states that have higher taxes, especially for corporations. We saw many move to Florida and move to Texas, from the Silicon Valley. We saw that
Mhm.
recently.
But you're saying Italy has some of the similar the same because Americans understand the attraction to Texas or the attraction to Florida because obviously the state tax regimes Americans understand very well, and for sure everybody at Tasty Trade understands extremely well.
Yeah.
Um, are you saying that Italy presents similar tax benefits to foreigners that are comparable to some place like Florida or Texas? Because the perception is that European countries have extremely high taxes, as I'm sure you're aware.
So Italy has extremely high taxes for Italian residents. Now, if you're an Italian who's been living abroad for a number of years and you want to move back, you've got benefits. So you're
Okay.
only, for example, if you're an employee, you're only taxed half of the amount that a resident is being taxed at the moment if you return. If you return and you have kids, that amount, the years that you get tax benefits doubles. Okay. The
Okay.
same
And what if
if
you're a foreigner who moves to Italy?
your assets are only taxed at 100,000 or 200,000 with the new government.
There's a fixed rate, basically. There's a
Yeah,
fixed taxation.
yeah, and that's amazing for someone who
Once you're making more than two or $300,000 a year, it becomes an extremely favorable rate. And if you're making millions of dollars a year, it becomes free-ish.
exactly. I mean, I wouldn't say free, but
But 100,000 on 10 million is a pretty good ratio.
a good amount. It's a good
Yeah,
amount. Yeah.
yeah. And so is that
So they
actually creating for, or do you see foreigners moving to Milan? Do you think that's
100%.
meaningful?
We work mostly with foreigners, especially with English.
Okay.
So the British people moving here, or the Italians from London moving here, because of these benefits. So,
Okay. And then what about Miami? Do you see the same thing in Miami where it's an out of state residents, whether it's Americans or Europeans, or is that more of a
so
mixed bag?
Miami is a little bit different. What we saw, okay, first of all, yes, compared to, other states which have higher taxations, many people, or higher income tax, many people move to Florida. What we're seeing though is that the Miami prices have spiked, so like literally doubled. Okay. It's become very expensive for locals in Miami to live. So that's actually even creating a better market or a healthier market for places close to Miami. Okay.
Hmm.
So we see
Hmm.
people moving, like locals from, let's say, uh, the downtown area, which has become very expensive for them to live in with rentals or purchasing prices double the price. They're
Hmm.
moving maybe to Fort Lauderdale. People are even going to Tampa up north. So we're seeing the market shift in different places, which is actually a bit healthier. That's why I'm not comfortable with saying it's a bubble. I think,
Hmm.
again, the people make the market, right? And that is a cycle of a market. So if it becomes unaffordable for the locals, they're still moving around and they're creating a healthy economy, even in different cities, which are a little bit outside Miami.
Hmm.
Do you see what I'm saying?
I absolutely do. No, and then when you look at sort of, and you and I talk about this, casually on a pretty regular basis, but when you look at the central bank policy, for instance, and the
Yes.
decision for the Federal Reserve now to begin cutting a rate cutting cycle, which obviously they're doing this week, how relevant is that for the European markets in general, in your opinion, or in your experience, and even and maybe more fair to you, how does it affect the Milan real estate market, which obviously is where your domain expertise resides? Is
So
it
I think in
relevant?
America, obviously, yes, it is. I think in America, obviously, it helps the buyers. It creates more enthusiasm to buy, for example, or renegotiate the loan, the interest rate. In Italy, it's interesting enough. Italians, we were very badly accustomed to almost 0% of interest rate on the loans, right? So for Italians, we're not used to paying interest on the loans. So right now, is it going to help? I don't know, because it's a very little amount that the central bank reduced. So I don't think it really makes that much of a difference here for the Italian mindset.
Mm-hmm.
'Cause again, we were
And
not
then
really
and then
like,
what the last and most interesting question, and an impossible one, but is how much does the presidential election in the United States matter to the markets in Europe, to the psychology of Europe?
I honestly think the presidential elections in America always matters, for every aspect. Because what happens in America, it does clearly influence Europe and Italy. It influences also the dynamics between both governments. Um, you,
Does it
uh,
affect the mark? Does it affect prices though? I mean, we don't have to get into the candidates and the policies, but does it affect
It affects
prices?
prices depending on which candidate has a better economic policy.
Okay.
So if we see, the dollar crash or inflation rise even higher in the States, and then the Fed reserves having to add more interest instead of reducing it, it could affect the European central bank also. So it could affect the prices. It really does depend, I think, on the economic policies of either candidate and how it's going to help the economic situation in America, and therefore it does affect the real estate, I think, worldwide, but especially in Europe. We saw it
As
also in
an
2008.
Yeah,
What happens in America always affects
yeah, yeah.
the
And so then I know I said that was my last question, but this really is my last question. If you had $1 million to invest as an investor in real estate in Miami or Milan, which market do you think is a better investment? I mean, obviously, people where they live,
Okay,
you live,
so
but
you know
as an
what?
investor,
It's not about the market. It's very subjective. It's about what your goals are, what you define as an investment, what return on the investment you want, and really what your preference is. So obviously, I would say the smartest thing economically or financially would be to invest in the American market, in Florida market, because probably the return of the investment that you can get is much higher compared to Italy. Usually, a good return of the investment here in Italy is considered a 5.5% or 7% is considered a good return, gross. While in Florida, you can get even 10, 12%, okay, on your return
mm-hmm.
of the investment. Depends what type of investment you make and where you're buying. Me personally, I love the cultural and historical aspect of the real estate. So for me, a good investment for the future would be really being able to buy in a very central place in Milano and very historical, or as we call them, palazzi d'epoca, because I think that would be an amazing asset to have, which in time is never going to decrease in value.
Mm-hmm. I agree. I think we should all buy ourselves a palazzo. Um,
Epoca.
it's a pleasure to speak with you. Thanks for the time, Rebecca.
Thank you, Dylan.
Rebecca Arippol, which my bad American accent, which is much worse than your English. So thank you for indulging me. This has been Bootstrapping. I am Dylan Ratigan, and more Tasty Live coming up after this.